Despite what you may have heard, the federal government didn't just take back the Virgin Islands housing money. It did something narrower, and in some ways harder for the VI to fix. It touches on past and future hurricane recovery funding. I'll give you the story, the numbers, and the response. Good day from the Virgin Islands. I'm Brian Loudon, and this is a VI update. On Monday, July 20th, Deputy Secretary Andrew Hughes signed a 13-page notice suspending the Virgin Islands Housing and Finance Authority from federal business. The suspension blocks new awards, renewals, and extensions across the entire federal executive branch. Funds already obligated, though, are not clawed back. VIHFA has 30 days from receipt to request a hearing. Failing that, the suspension becomes final. The standard is lower than most people may assume. HUD is not alleging VIHFA broke the law. HUD is asserting it cannot presently trust VIHFA with federal money. There's more coming. HUD's Inspector General is investigating VIHFA right now, the agency's officers and its employees. The suspension runs pending the outcome. This is not the end of something. It's in the middle. Here's what the assertion of lack of present responsibility rests on. Darren Richardson, VIHFA's former chief operating officer, is serving 36 months in federal prison. He chaired the agency's bid evaluation committee. Using that position, he steered a disaster recovery contract to store hurricane lumber, raised its value by more than $1 million, and HUD's notice says he accepted a $170,000 payment from a co-owner of the company. The lumber never reached the people it was meant to help, left to rot in the sun. Federal regulation lets HUD impute an officer's conduct to his organization. Richardson's behavior now belongs to VIHFA. 4 months ago, HUD's Inspector General raided the agency's fraud controls. In the auditor's words, at or below the lowest desired goal state. 8 of 10 Virgin Islands Housing and Finance Authority officials interviewed did not know what fraud schemes their own programs faced. In 2023, VIHFA's internal auditor surveyed 2 divisions. Employees reported personal knowledge of fraud. Employees reported management overriding controls. Those results reached 2 division directors. They never reached the executive director. They never reached the board. The next year, Richardson was indicted. VIHFA's own answer to that audit is worth hearing. Its own management generally agreed with the findings. They described new training, updated policies, and a risk officer hired in 2025. It told auditors it expected a full fraud risk management program in place by the second quarter of 2026. That quarter closed on June 13th. The suspension came 3 weeks later. On the money, Congress sent $1.9 billion. 9 years later, VIHFA has spent under 30% of it. Single-family rental rehabilitation stands at 2% complete. Mitigation housing stands at 0. Public facilities did achieve 83%, which is real work and belongs in the record. Against that, VIHFA has spent 55% of the money set aside for its own administrative costs. HUD's notice says the gap suggests, at minimum, poor management. $67 million was allocated in 2021 to rebuild the electrical grid. 2% has been spent. Back to the storm question, because it is July in the Caribbean. VIHFA is not the Virgin Islands FEMA grantee. VITEMA is. That is stated plainly in the federal government's own 2023 audit and is unchanged. VITEMA is not named in the suspension. Assistance paid directly to households doesn't run through VIHFA either. The real exposure is real and narrower. When FEMA covers 90% of a recovery project, someone has to pay the other 10%. The government of the Virgin Islands has been covering that local share with housing recovery money through VIHFA programs, budgeted at $415 million. Whether VIHFA can commit new match money while suspended is the open question. I don't have an answer to that. Governor Albert Bryan Jr. calls the suspension political. He is correct that obligated funds are not frozen. He describes the audits as old. The fraud audit is dated March 24th of this year. HUD has monitored VIHFA 8 times since 2019. 37 of their findings are still open today. And to be clear about something that is odd, HUD released this as a national news exclusive, bypassing the local government above the agency in question, used some unprofessional language in the letter during an election cycle, 6 weeks after doing the same thing in another city. Unfortunately, the timing and quality of the documents does not change the facts inside it. I read all 4 audits HUD cites. There is a strange detail. One of them is not about the Virgin Islands Housing and Finance Authority. HUD's opening exhibit is a report from 2016 that the notice says questioned roughly $6.2 million. That report audited the Virgin Islands Housing Authority, a separate agency examining rental inspections. It contains no reference to VIHFA and none to disaster recovery. Its actually questioned costs are $152,484. That weakens one bullet point. The 2016 report does document a different type of problem at a different agency, and that agency's record deserves its own look on another day. Neither fact touches the conviction or the completion rates, which are what the letter actually rests on. Here's what stays with me. A federal law barred HUD from signing a single grant agreement until VIHFA certified it had working financial controls. VIHFA certified 4 times a year on every application it filed. HUD monitored, found problems, left findings open, and kept sending money for 9 years. HUD's own auditors quote the core reason. Because these are block grants, the department does not treat a grantee's fraud risk as its own risk. The federal government knew, in detail, nearly a decade, and by policy, ignored it. The certification was required. It was made. Monitoring said it was not accurate. Nobody upstream owned it. Nobody in the VI owned it. Richardson going to prison did not fix that. The suspension does not fix it either. It stops the new money. It does not build the agency that was supposed to exist in 2018. This is a failure in broad daylight. Deputy Secretary Hughes says Washington cannot responsibly keep writing checks to an agency in this condition. Governor Bryan says the cost of that decision lands on Virgin Islanders who did nothing wrong and have already waited 9 years. 9 years of audits said all of this out loud in public, and nothing moved until a federal agency shut the door and told a national outlet before it told the Virgin Islands. Here's the question I keep coming back to. Who is supposed to stop this? And if you have been waiting on a home repair, an unpaid invoice, lights going out, tell me in the comments what those 9 years have actually looked like from where you're sitting. I'm Brian Loudon. This is your VI Update. Your islands, your news, our reporting.